How are you guys doing? Welcome back. Today is 11/8/2021. I'm not going to do my usual watch list of 8 stocks I really like for tomorrow. If you want that information, if you want that watch list, join the Discord. The description is in the box down below. I don't really want to sell the Discord today or the community as much, but if you really enjoy what we're talking about today's video with the 16 best Biden picks from the infrastructure bill, the Discord, my community, may be for you. Check it out. Otherwise, let's just look at the 16 stocks and what's the best one, in my opinion, going for the infrastructure bill. So as I just said, we're going to be discussing the fundamentals, the mental analysis, and the technical analysis. All 3 analyses we're going to discuss today. We're going to start off with technical, then get into fundamental for every stock, and then end on a mental note I want you guys to think about. I don't want to take too much time talking about like, oh, here's my great channel, do subscribe. But I mean, if you enjoy what I do, look at the subscribe button, look in the description box for more details. We'll have chapter notes, my Discord, and my community are all there. All great stuff. Otherwise, let's just hop right into it. So if you guys keep up with the news, which if you're on this video, I'm almost positive you do. And I want to talk about the Biden infrastructure bills. Now again, I say Biden, not because I want to be political. He's the president. Trump passed it. I call it the Trump infrastructure bill. I'm not really trying to be political like that. Obviously, Republicans voted for this too. But this is a huge deal. We're going to have a lot of hype coming in. This is going to have monumental effects on the sectors you should be focusing and what stocks you should be focusing. Not every sector is created equally. They're not all going to benefit the same. This is obviously going to affect basic materials, comm services, and industrials the most. There will be some technology involved with some EV plays as well, but the major facet is going to be XLB stocks, XLI stocks, and XLC with some K in there. Those are the ones who are getting the most money. Let's look really quick at what the financial sources of investment are going to be. So as we can see, Joe Biden really wants to focus on reduce the IRS tax gap, unemployment insurance program integrity, not really that important for us, unused unemployment insurance and relief funds, okay, repurpose unused relief funds, okay, state and local investment in broadband infrastructure, that's big, infrastructure, allow states to sell or produce unused toll credits for infrastructure, great, extend expiring customer user fees, reinstate fees for chemicals, 5G, that's big for CCI. That's a huge deal. Extend mandatory sequester. I'm not good at reading. Petroleum reserve sales, public-private partnership of pay bonds and asset recycling for infrastructure investment and macroeconomic infrastructure investment. I cannot read with my glasses. I can't even read them without it. The big word here is infrastructure. That's super obvious that we're focusing on infrastructure. What infrastructure are we talking about? Let's look at it. We're looking at the total $579 billion. It's a lot of money. If you invest in stocks, you want you a little chunk of that. Let's get some, right? We have 2 facets, transportation and then other. You can see transportation alone is $312 billion. This is going to be spent on private companies. You have companies that are going to go up for a contract, try and auction it off and get this. If they get the funding from the government, their stock price is going to absolutely soar. And you're going to have to think about PE ratios, earnings per share, how much of the government money is going to go to the investors, what's the growth going to be, a lot of stuff we're going to discuss. But a lot of it's going to transportation. Roads and bridges is number 1, right? Safety, public transit is pretty good. Passenger and freight rail is $66 billion. Almost the biggest here is railroads. Transportation and railroads are huge. EV is small. A lot of folks are calling chip and blink. I'm calling chip today. A lot of this, it's only a very small part of this, but keep that important. Buses, that goes with this one. Communities with reconnecting, that's not a huge deal. Airports, I mean, the quickest way to become a millionaire is to invest $1 billion in airports. They don't make a lot of money, but again, it could be a good play here. Post and waterways, ports. Infrastructure financing, then we have water infrastructure, broadband, that's 5G, environmental remediation, power infrastructure, that's great for XLU stocks, of course, Western water storage, and resilience. Don't know what the hell that is. But here we go. That's what we're looking at today and where the money's going. So let's do the technical analysis and the fundamental analysis together and show you what we're looking at. And my 15, I guess 16 best plays going into this year and into 2022 because of this bill alone. With that being said, let's hop right into it. versus VMC. I love VMC. So I've called VMC a bunch of times on this channel, 4 or 5 times. When you see this purple dot, that's where I called it at. This was my price targets for the Discord group and the community. I want to keep these on here so you can see I've been calling these just so I want to keep them on record as well. But it's interesting to see. VMC is Vulcan Materials. It's a really good company. What Vulcan Materials focuses on is the largest producer of construction aggregates and makes up 91% of their sales. So this company makes massive construction aggregates for different companies, and then it goes to the government to make infrastructure. It's perfect. It's probably the best stock, honestly, what we're looking at. VMC has a history of just going up. It does fine. Yes, it steadied out from about 2016 and 2019. It was going sideways, but again, the dividend has only gotten higher. The earnings have only gotten better. As of recently, it's been printing. There's no true trend line. We were playing off of this, and we had a very, very good time. As of recently, it's broken down. No true resistance trend line we can play off of quite yet. So we're staying in a pretty relatively small time frame of the 180-day 4-hour here. If you're new to my kind of charting, the white line here is going to be support. And orange line is resistance. We obviously don't have one at all-time highs here. Volume profile are these 2 white lines. That's where 70% of volume happens. This red one is the highest volume node. It's the most gravitational. It's the strongest on the whole entire chart. I'm not going to dive deep into volume profile right now. If you want to learn more about that great tool, you cross this with traditional volume, you're going to be a 10 times better trader, I can guarantee it. Watch this video right here. I don't have the time right now, but watch that video and come back, and you can apply your own volume profile to these charts and make a huge difference. VMC is at all-time highs. Would I buy it here? No. I don't think VMC up here is a great purchase. I think it's going to be relatively the same when it comes to its value. A few days ago, we got to get a pullback, right? You can probably start drawing some technical analysis trend lines here and try and find yourself some type of channel. You know, it's broken out, and the main thing I'm looking at here is that when a stock breaks a hard and long time resistance, like it just did, you reset all trend lines, right? I want to give it some time here. Let's just relax on it. Yeah, I can turn indicators into a 10 crossover, yada, yada, yada. But right here, we're just going to have to wait. VMC is not a good value here. It needs to pull back, even if we buy it higher. But it's made some form of pattern, some trend lines. I'm happy with that, right? You have to remember this too, with VMC in particular. If you always think you're late, you're never going to be early. One more time, that's mental analysis. If you always think you're late, you're never going to be early. All the folks who 5 years ago, oh, Tesla's not worth this, oh, derp, derp, derp. They probably feel pretty stupid now, right? Bitcoin at 14,000. They probably feel pretty stupid now. So VMC, I wouldn't buy here. I think it's fine, but again, I want to see some more value before I buy in. Speaking of which, let's check out the fundamentals together. VMC is a pretty good PE ratio. I don't think it's terrible. 40 is okay. I want to see under 20 at best. And again, for PE, it's going to drop, they think. So they think, 4.88 is not the worst thing of all time when it comes to its actual value. It's on the S&P. That's good. Massive market cap. That's good as well. Dividends pretty good here. When we look at the ROA, it's okay. You want that a bit higher. ROI, you want that a bit higher as well. Gross margin, you want it a bit higher. So it's not the best performing stock when it comes to what it doesn't necessarily use its assets the best and return on it, but it's a good stock nonetheless. I don't think it's a horrible play by any means. No one's shorting VMC at this moment. That'd be absolutely ridiculous. Think you're going to just short the one in the ground. But I don't think we have a clear enough sign to buy in quite yet. But VMC into this month, into this year, is an absolute steal. It's going to be fantastic. You let it pull back, get that first major pullback, and you're going to be snacking. I love it. Next is MLM. Yeah, not multi-level marketing, but Martin Marietta Materials here. We can see a great channel of what do they do as I pull it up. They're the largest infrastructure producer of flame-retardant asphalt and other things for the road. If you remember, this company has the best ties to what we're looking at. Roads and bridges. They do a great job with this. Fantastic purchase off fundamentals alone. MLM, you can see two trend lines here. Let's zoom out. This is a great channel up. Again, this resistance is kind of like, arbitrary, because you could have said maybe it's like this and it's making a broadening wedge and new one's going to set soon. But this is a great trend up and a great trend here. It's very, very predictable. With that being said, earnings just happened. Overreaction, it came down. Earnings, overreaction, it came down. Earnings. This is not sustainable. It will be coming back down. MLM's best purchase is at this trend line or even a retest off this little flag it had here, right in this area. But just like VMC, it's had so much hype this weekend, it's not a good purchase here. MLM into this month, into this year, absolutely. I wouldn't purchase it up here. I don't think it's a good choice. But when it comes to the fundamentals, let's check it out. Also on the S&P 500, it's a large cap. Market cap is at 25. That's good. 35. So it has a better value than VMC, and they're very similar. So let's take that into consideration. It has a better value. It's a lower PE than VMC. That's good to see. It also has a lower ROA, but a higher ROE and ROI. That's pretty good. And again, the gross margin's 26. That's pretty good. Nothing else here stands out. No one's shorting it. That's a good sign as well. MLM is very close to VMC. It allows you very similar, right? I think it's a pretty good purchase. I like what I see, but again, I would not be buying this high up here. It doesn't do it for me. But I think in a week or two, maybe a month or two, it'd make a lot more sense. I would definitely watch list it and play it this year for sure. Next is NUE, Cliff, and X. All three are massive steel producers. Why did I include 3 steel producers in a row? It's on purpose. I want to check one, price. NUE is more expensive than Cliff and X. Secondly, they all have very similar setups and very similar trends as well. And then third, let's check fundamentals and see which ones are best. All 3 are winners. I've called X and Cliff so many times and it's never failed me yet. But I want to check all 3. Let's do it together. So we'll intertwine all 3 of these together. NUE, obvious trend up, obvious support, obvious resistance right here. Cliff is a channel up, but again, that same exact setup here of this trend line right here with the hard resistance is also very clear here, right? Let's make this a orange line, just like that. And then X is very similar as well, more horizontal. So we can see NUE has the most upward trajectory, the most upward trend. Cliff is kind of in the middle, with X being the most horizontal. But again, look at the price here. NUE is 116, Cliff is 23, and X is 26. If you only have $1,000, you get a lot more leverage out of Cliff and X compared to NUE. But that premium of having, 5 times the price, you have a much more bullish setup, in my opinion, because you're going from a horizontal channel, which up here it's overbought, no doubt about it. Or Cliff, where you have a small upward, upward channel here. It's a very good one, right? It's a little bit overextended here, but again, it's okay. But NUE, a clear uptrend. It's always at higher lows. It's very, very consistent. I mean, it always goes up. It's been very good here. So you're paying more of a premium here. All 3 had earnings. It's an overreaction. Once again, would I buy NUE, X, or Cliff here? Not really. I would buy Cliff over all 3 right now. It's probably the best value, the best higher lows. X here has the best breakout potential, but I think it's pretty good. I think all 3 are fantastic. I'd watch list all 3. With that being said, let's check out the fundamentals together real quick. NUE, PE ratio is 20. That's good. For PE, it says it's going to be better. Take that into consideration. It's saying that in a few months, a few years, it will have a better PE ratio and be a better sale. Now, this news may change that, but it looks like it's going to be better in the future. You buy in now, it's probably a good sign. Their ROA, I, and E are not present. I don't love that either. Their gross margin is not present. I don't love that. Small insider ownership, it's not good or bad. And again, it has a pretty low float. I like that as well. NUE, it looks pretty good. Compared to Cliff, oh my god.
Hey, that's pretty good.
Oh jeez. Oh my god. This is what you're looking for. Look at this. Oh my god. A 5 PE ratio. I love you. Oh my god. That's amazing. That's that right there. That beats NUE by a mile. That's fantastic. Their PE, their EPS is tiny. You love to see that. Their ROA is 12.
Have on our guest Instagram, pull interesting pictures. What's your attitude towards this?
74% return on equity. Now the ROI is low. That's low. That's the problem right there. And the short float's a bit higher, and it has a higher volume. But again, that PE ratio is insane. Again, all that means is that you're paying $5.76 for every dollar of earnings. So you're paying $5.76 to earn a dollar of earnings. Compared to NUE, you're paying $20.83 for earnings. X, let's check it out. Oh my god, it's $2.36. Oh my god, this is even better. I mean, that's absolutely redonkulous. What a PE ratio. It can't get much better than this at all. That's amazing. ROA is 21. Oh, it's 56. Okay, the return on investment is pretty low. It has a lower volume and more folks are shorting it. So it looks like to me all three have pros and cons. I think the best is CLF there. I think that is probably the best you're going to see with a mix of not a insane short float, but at the same time, my God, do you ever see a $2 or 2.36 P ratio? Jesus Christ. I think all three are fantastic. Watch this. That's a steal play. Those are amazing. Next is cat. Not like this cat. Meow. Not like this cat right there, which is a good boy. This is the Caterpillar who makes, industrial size mechanical engineering marvels for construction and mainly for farming as well. You know what cat is, right? I call cat recently, knowing this is probably going to be a huge playoff for this. I was a bit early. I've been calling cat for, year at least because cat's amazing. But again, up here, am I going to buy it? No. This is a nice channel up. It's not the greatest thing of all time. It was a wedge down. That's why I used dotted lines. This was an old pattern we saw. And now we have a nice channel up. I think you could get 210, maybe 212. Let's be honest. If you're going to hold the stock, if the cat touches my hand, if you're going to hold the stock for 2 or 3 years, is $4, which is about 0.3%, going to make a big difference? No, not in the least. So, I mean, if you're going to be extremely money greedy here and be like, I got to get every penny, yeah, you can wait. But I don't think this is the time to wait. I don't think this is the time to be like, oh, we're going to be Mr. Wait for a 2% pullback. I think right here, look at this trend. It just goes up. Right? It just prints. I mean, it goes up constantly. Yeah, it has years. It just has dividend payouts. I mean, 266, 255. In 5 to 10 years, it's only going to get better. I mean, you're getting almost $4 to $5. Sorry, $3 to $4 every 3 months just for holding it. You're going to get great returns on your dividends. Right here, an absolute steal in my opinion. It could be a little bit lower. If you would have bought when I bought it, even better. But again, it's just going to go up farther. It's an absolute rocket. When it comes to its EPS and PE, 2236 is average. That's about what our first play was at. It's okay with, it's like VMC level. 1687 should be better deals as time goes on. That's fine. ROA, you want that up. ROI, you want that up. But return on equity, it's pretty good. Again, it's a pretty large cap. It's on the Dow Jones and the S&P. It's well known. Pretty good volume. No one's shorting it. Looks good to me. It's just an easy play. I don't think this is supposed to be a difficult one. I think you know what cat is. Cat prints. It does what you want it to do. God, I think it's just a really good play. I love what I see. I would definitely watch this and play it this year. Next is going to be Deer, another call I played months ago, knowing this is probably going to happen. And once again, we're hitting this hard resistance. Would I buy Deer here? I would not. I would buy Deer closer to 350, hopefully 340. But again, if you like breakouts, 365, it breaks this bad boy and rips. Well, hello, you're going to get at least 6-7% on that run. If you get all-time highs like the Russell 2000, it's going to be just ripping hot. I mean, Deer is having that issue with the strikes going on right now. Folks know they're worth more than what they're getting paid. Then I side with the small person in all scenarios. I think hedge funds are terrible. I don't like massive CEOs who make a bunch of money. They should be paying their folks more. But Deer, if they get that figured out, is an absolute rocket. I mean, you look at what they're doing. I mean, it just goes higher. Yeah, it may take years to get the growth out of the stock you want to see. But I mean, we're making $2, $3, $4 every earnings season, around $70, and since then it's gone up to about $6, $7. Man, in 5 to 10 years, that's going to be passive income. DE here makes a whole lot of sense. Yeah, you want it 4 or 5% lower, but again, if you're holding for 2 to 3 years, do you really split those hairs and make a big deal about it? I don't think so. Deer, when it comes to its fundamentals, 2050, again, it's fair, and again, in 5 to 10 years, that's not bad at all. 1619, like the project, haha, looks pretty good. This is pretty good. ROA, it's okay. ROEs are pretty good there. ROI is okay. Gross margin is positive. That's pretty good. Again, it has a lower float than cat. Take that into consideration. It'll be more volatile. And it has no one shorting it. I like what I see. I think Deer's a really good looking stock here. I think, again, if you want it 4-5% lower, you certainly can wait. I don't know why you would. To me, that's just kind of like you're really splitting hairs here and really just trying to be a perfectionist. I think a little bit lower, good. If it rockets and breaks the resistance, I'd go in and play it for momentum. Deer, absolute killer. Next is URI. This is United Realties Inc. If I remember correctly, I played this multiple times. They have over 1,100 stores where they rent out machinery. Now again, this is going to be a toss-up between, do they really get paid for renting their materials out? I'd say yes. I would lean on the side this is going to have a great impact on their business. I love what I see. I called URI months ago. It did us well once. Will it do it again? We have a nice newer trend line here. It's a bit more aggressive. This was an obvious wedge up and it broke out. Love it. Look at it. This gap wanted to be filled. And if you're new here, gaps like to get filled, big fella. And it's coming back down. That in itself is a sign that this is an earnings overreaction. Earnings, it goes up, it comes down. Earnings, it goes up, it comes down. Earnings, it went up. It's going to come back down. If you can get URI at 380, cool. 370, I love it. At 360, I will do a 360 off my roof. I'm so happy. And at 350, boy, Loch Ness Monster money, we're happy to be right here. It's an absolute steal, a bit lower. I'm not paying 390. All right, it's about 10% too high. Compared to cat, compared to deer, and even compared to like NUE, it has better value. I think it's overbought right now. I want it to come back down. Earnings overreaction, let it come on down to us. But in a few weeks, you should have that. When it comes to fundamentals, 23 again is higher. It's probably the highest of the day. It's okay. ROA is fair, E is fair, I is fair. Good gross margin though. I like that. You know, the EPS is fine here. It's very low float though. It's about like 6 times less than let's say the other stocks that are in the 400 million, 500 million. It's much more volatile, much more liquid, which I do like a lot here. And again, no one's shorting it. No one owns it on the inside. It's just a nice publicly owned stock here. I like what I see. I think you can get it for a lot cheaper though. I'm not going to be sitting here saying buy into it at this price. But again, 8-10% lower, or if it breaks some resistances and forms a new pattern, I love what I see. URI, absolute steal for this Biden infrastructure plan. Next is chipped. I call it chipped right over here, right before it sank. I was a bit too early. Granted, my TA was lit, and now it came back up. You should know what charge point is at this point. If you don't, that's totally fine. This is the EV charging people. You have this one and Blink are the two big ones a lot of folks talk about. I think this is overhyped currently, given the fact that we have the infrastructure bill only giving $7.5 billion to cars, and then the other $7.5 to buses. You have almost 8 times as much going to trains, which is funny because who cares about trains besides Thomas the Tank Engine memes? Those are fantastic. So I think chipped here, coupled with the future of how they're trying to get, you know, every post office vehicle is an EV. Ford has EVs. My local movie theater and stores have EV charging stations. This does make sense a lot. Chipped up here is overbought. Okay, I hate to say it. I mean, you could have bought them when I called it and be up 35%. You'd be saying pretty, hold it for the next few years, have a good time. There's no dividend. Earnings usually takes money. And again, it gets, look at earnings overreaction. Earnings overreaction. It does this. I think chipped at 24 is your best buy-in. Maybe you're going to see life at 26.20, but 24.50, anywhere down here is a lot better. And again, are we splitting hairs? I think if you were to give up 11% of profit and buy in now and hold for long, you'll be just fine. Why would you be worried about that? But I think, again, clearly chipped has a floor of 1930. If you can get that one more time down here, it's an absolute steal. Anything above that is fine. It's okay. Then again, if you break out of this pattern and go up higher, I'm wrong. But I think you could get it a little bit lower. When it comes to chips fundamentals, it's not great. Okay, it's negative. So again, with the negative returns and everything, you're not going to have much to dive into. Very low float. No one's really shorting it. Insiders don't own a lot. Not much to go off of here because right now it's negative. It's losing earnings per share. It's not great for fundamentals, barring the fact you have the fundamental news on your side. Now the fundamental numbers don't look good, but if you believe in chips, if you believe in EVs, it makes a whole lot of sense. I don't really love the fact that it has negative here, but again, for value, it does make sense. I would want to buy it lower, and again, I think in 2-3 years, that earnings per share is going to go positive, the EPS will go positive and be a great deal. I think it's just fine. Next is OSK Oshkosh Bogosh. No, it's just Oshkosh. This is a company that's focusing on EVs when it comes to mailing and EVs when it comes to the overall federal government and the post office, right? So I think OSK, a lot more logical towards the trend line. It's made a nice trend up. It made a channel down, and now it's broken out. If you want to look at the full picture once again real quick, look at OSK prints, baby. It just keeps going up. Yeah, it has years it goes down. That's fine. But again, if you were to goof up your entry and you go long here, you should be fine with earnings, dividends, and of course growth eventually. And of course you can sell cover calls in this and probably be just fine. You're getting about $2.30, $3, $2.30, yeah, about $2.40. So you're getting about 1.5% return every 3 months on your holdings. Not terrible. Again, should OSK be bought towards 112? Sure. The trend line, even better. Right here, it's a bit overbought. It's hitting the POC here and dying off. If you break above that and break above all its resistances, sure, you can go long. But again, I think OSK, just like all the other ones, are a bit overbought from the news. You can probably get them just a bit lower. But again, the next few months or years, it makes complete sense. OSK's fundamentals, $16.89. Pretty good, and if you buy it now, in the future it'll be a pretty good value. I like that. No one's shorting it. It has good ROAIE. They're okay. You want these to be higher. You want this above 14. You want above 30. It's fine. But look at that float. If you like volatility, this bad boy, it's got that. It's very low float. I think it's a pretty good play here. I like what I see. I think you could probably get again a bit lower, but to me, why would you want to wait? I think it's pretty good right here. Next is FCX. Boy, oh boy, daddy likes copper, and this is the copper play I'm going with. If you're gonna need copper for these wireless things, you're gonna need copper for 5G. You're gonna need copper for pennies. I don't know. It doesn't matter. But I think that this is the best way to buy into copper. And as we can see, it's breaking out. I called it over here, said this is a good breakout play, and you would have been up 16%. What a call. And I think right here it's breaking out. So you have two options. You play the breakout and go along, hoping it just keeps going, or you'll wait for it to come back down. I'm sure this is going to be a hard resistance right here. It's probably going to have a hard fight over these old supports, old resistance. And probably if I zoom out here, it's historically a strong resistance. But again, look at even over here, historically strong resistance. This is the make or break it, baby. You like breakouts, you're going to go for this. That's going to be the play. I don't think it's the greatest. I think a lot of these plays are going to probably pull back just a little bit, and then real investors will step in. Real institutions will step in and push them higher. But when it comes to our fundamentals, 30 is fine. Again, it's going to be a better value in the future. That's implying that there's a lot more value in the future here. I like that. ROA and E are not here. ROI is a little bit low. It has a large float. It's on the S&P, big market cap. No one's shorting it. It's just fine. Again, it's fine. I think it's okay. And I think it'd be better for copper plays for sure. I think this is probably the best copper play in my opinions, for sure. Sorry, I'm just clicking around right here. It's the best copper play in my opinion for sure. There we go. I definitely watch listed for this year, see what it's gonna do. I love what I see. Next is BIPC, Brookfield Infrastructure. What they're gonna be focusing on is a lot of transportation infrastructure across the board. It's just a good broad general purchase for infrastructure bills. And it's looking really good here. Strong support, breaking resistances. It's a newer one. It's a newer IPO. It had a really good trend up here. It's broken down recently. So again, technically speaking, not the greatest. It had a nice little trend down. It's broken out. Higher highs here, higher lows. Good earnings call here, 89 cents, 61.51. Good dividend returned about 1% every single 3 months or so. It's looking good here. We get some more life and breakout. We may have a new uptrend here. I don't love the technical analysis. Let's check out the fundamental real quick. So with BIPC, we can see it doesn't have P ratio. It's not an index. It's a good size one. Good ROE, good ROI, not good ROA. That's okay. And then again, low float here. BIPC, I just like this play for the infrastructure side of it. I don't think it's the greatest thing that ever happened. I would play other ones first. But again, if the infrastructure bill gets more hype, BIPC is going to be it for sure, in my opinion. Next is CCI. That delicious 5G. This is the company that produces all the 5G stupid, tall, what you call them? Towers? Yeah, towers. They're the ones who make the towers. And so if 5G gets pumped with this bill, this is the place to go. CCI of all the plays is in fact the best sale and the best deal. Absolute steal. I mean, this is where you want it. Maybe you want it 2 or 3% lower, but again, this has plenty of room to run up. Great dividend return. It's an absolute snack. $1.33 plus earnings call. Oh my goodness, that's almost $3 for $1.79. Love what I see. Great value, great dividend return, great trend line, great support. You get a breakout here, boy, it's off to the races. I love CCI. It's probably one of my top 3 of the day. Let's check the fundamentals. It's a bit overbought. Womp womp. Now, you can have a big P ratio if you understand that when it's low, you're buying into value. When it's high, you're buying into growth. And so we're planning on CCI growing, right? Because it's going to be a company that has more 5G. And having a higher PE is just fine. Because the EPS is also very small here. I like that. It's fine, it's fine, it's fine. Nothing to break the bank here. No one's shorting it. That's good. S&P, no one owns it. It's a public company. CCI, Crown Castle International. Man, if you like that delicious 5G in your bones like I do, I just love what I see here. I definitely go long. It's a great play. Super simple. Next is ETN, Eaton Corporation. I've called ETN quite a few times before. This is our green and environmental play of the day. This is the one that goes most into the green bill, and having, you know, solar and EVs all together, ETN is it. Eaton is probably the easiest play when it comes to playability. Hey, look at that. I called this when I first started my channel. This is what I used to do for my patrons. Boy, look at that. I called it at 119. Where's 119 at? Boy, what a play. 43% later. Great channel up in all of its integrity here. I think that you want to buy it lower. And again, this is overbought as cuss word. It's going to come down. Let it come to you, baby. Earnings overreaction. Earnings. Overreaction. Earnings. Overreaction. It always comes back down. ETN here makes 0 cents. I would not be buying it here. Maybe if you had like $10,000, you wanted to scale in $1,000 a month to get a fair value. That makes sense. But I think ETN a bit lower is way smarter. But fundamentally, it's a complete snack. Let's check the fundamentals. 33 is fine. 23 is fine. That's fine, that's fine, that's fine. It's a low float, which I do like as well. S&P, it's a large cap. Again, across the board, it just checks out. It's not going to be some great, you know, oh, look at this Tilray play no one's ever heard of. You know, it's a fine play at best. I like what I see here. I'd watch list it, play it this year. It's going to be completely great. If you hate individual stocks, PAVE is the global ETF of all of these. As we can see, as infrastructure goes up, this goes up. It goes sideways. There's probably a really dumb investment years ago. But ever since we have this new bill, it's definitely taking off here. No dividends, none of that. There's going to be no P ratio. It's just the ETF. Up here, it makes no sense. Down here, it makes more sense. I'll just watch it. In general, if you have a lot of money to scale in with, like $1,000 and you buy like 40 shares every single month for like 10 months, that makes sense to me in scaling in. But up here, technically it does not. I want to come down to 27 or to this trend line. PAVE though is your easy man's answer of like, I don't know what you're talking about. I'm just going to buy infrastructure bill. PAVE is it. There you guys have it. Hope you guys enjoyed the in-depth look at all these kinds of plays. I don't usually do this, but I thought folks would enjoy a little switch of pace. With that being said, if you stick around, I appreciate it. Like, subscribe, hit the bell notification. My sweet baby angels. If you want to get the watch list, it's on the Discord. If you don't want to join that, well, we'll be back to normal tomorrow. I appreciate you. We'll see you guys later.